Well, the weekly numbers really not looking all that bad, Pim. The major averages virtually unchanged for the week after lots of ups and downs from earnings. The major averages, as you can see, the Dow down about 1/4%, the S&P down almost 0.75%, and the Nasdaq down just slightly for the week. Major averages year to date, what we're looking at, the Dow still up almost 14% for the year. The S&P up nearly 20% for the year, and the Nasdaq up about 37%. Those are the year to date numbers. Now, lots of earnings this week, and since the start of the third quarter earnings season, 80% of companies in the S&P 500 that have reported earnings, they have released better than expected results. And stocks retreating in Friday's session as a drop in crude oil weighed on those energy shares. Crude closing out the New York session $80.43 a barrel. That was down almost 1%. That led stocks like Exxon and Schlumberger lower. Industrials and the railroads led lower after Burlington Northern Santa Fe fell the most since March after forecasting a quarterly profit that trailed analyst estimates. And remember, many traders look to the truckers and the railroads for signs that the economy is improving, because if goods and services are being transported, then that's a good sign for the economy and that the economy is pumping. But we really didn't see that in Friday's session with Burlington Northern Santa Fe. Technology stocks among some of the winners after Amazon and Microsoft reporting earnings that beat analyst estimates. So that was one bright spot, you can say, in a down market. But the one concern that still seems to be slipping into the market, and that is valuations. The S&P still trading near its highest valuation in 5 years. And coming up for next week, we have a total of 154 companies in the S&P 500 that will be reporting their earnings. On the earnings calendar and on the docket for Monday, we have Corning, Verizon, National Oil, Wells Fargo, and McGraw-Hill. That's it from here at the New York Stock Exchange.